Alright, how's it going everyone? Bryan Baylon here, and I have a 2018 March real estate market update for you. There's going to be some background noise because I've got the dog in the background, so hopefully you can excuse that. But I got some information to deliver to you guys, and hopefully it'll help you kind of consider if you're thinking about buying a house 2018, what the market's like right now, and if you're trying to sell a house, what the market's like as well. There are advantages, disadvantages, and things to look for. I think this video is really going to help in identifying some things to watch out for so that you can plan for the best course of action based on your situation. So I start out with vitals, and right now this is basically actually just a snapshot of what's going on as of March 2018. And if you go just to active listings, you can see there's only 16,924 excluding UCB, which is under contract backup. 16,924 active listings versus 19,648 from last year. So we're down 13.9% and down 1.7% from 17 to 11 from last month. So the name of the game really with our current market is just wrenchingly low inventory. And the numbers here kind of show for that. And of course it's comparing March 2017 to March 2018. It's about just under 3,000 listings, active listings less than last year this time, and from last month we're down 1.7%. So you're seeing, and I'll show you some graphs in a little bit, but we're seeing some just decreasing inventory, year over year, especially the past 2 years. And then you'll see that more clearly, which does pose a problem for buyers because there's just not enough homes to buy. I have some buyer clients of mine right now. We're trying to find homes in the southeast region of the valley, and as soon as these homes in the 200 to 225 come on the market, there's one time I called in, there was 11 offers on one, and I asked if they were going to go down. The listing agent said they don't have to because they got 11 offers. So just a lot of activity, a lot of action with buyers. Demand is still fairly strong, but the supply just isn't meeting it. So, of course, you have multiple offers on properties and a lot of action on listings when they come on the market. Active listings, including under contract backups, you still see the difference, just about 3,000 there difference. And then, of course, but actually, interestingly, we're up 1.2% compared with last month. So that's an interesting statistic there. Pending listings, so we're about down like 0.5%, but up 18.5% from last month. Usually, January, November, December, pretty slow on listings. End of the year, holiday season, people don't want to move, don't really want to sell their house. They'll say they'll wait till next year. January they start getting put on the market again, and then February some of those start to go under contract, especially in this current market where it's a hot seller's market, but the demand is still there, so buyers want to buy. So you're seeing that increase in the February, March, April up until the summer. So you see under contract listings, including pending, so pending on CCBS and UCB. CCBS is contract contingent upon buyer sale, and UCB is under contract backup. So anything that's actually under contract and not in an active status is down a little bit, almost 1% this year, but up 16.6 from last month. So down from year over year, but up from last month. So we're seeing the normal trend. As we leave January, February, go into March, it starts to increase activity in the real estate market. Monthly sales, so we are up 7.6% from last year on this time, and up 14.4% from last month. Again, we're seeing the pickup there from the holiday season, and then the monthly average sales price per square foot increased about 7.5%, but down 1.3% from last month. So that's actually an interesting statistic. But you're seeing a 7.5% per price per square foot increase, and so that's quite significant and pretty healthy actually. It's not as it's not a 20%, 15, 20, 30% increase, which could look like a bubble, and right now it's not. 7.5% strong. but a healthy rate of growth. So nothing too drastic. And so monthly median sales price is up, so 9.1%, up 2.5, almost 2.5 from last month. So that's a huge jump. And so prices are going crazy right now just because the story of inventory is low. The demand, is still there. So we're seeing, less and less homes for sale. Buyers are either remaining the same or maybe even increasing a little bit, and therefore, consequently, prices will go up until the market tells us that the prices are just too high and it's crowded out the general market of buyers to where it just became unaffordable. So here's a little snapshot of what we're looking at, and so you can kind of see just some of the stuff I was talking about. Kind of neat in the bottom here, listing success rate. If you look at this is 2016, 17, and 2018 March, and so you have a 75.6% listing success rate back in 2016 March, which is pretty good chances that if you put your house on the market, it's going to sell. But right now it's sitting at 83.7, which is fairly strong. So you can see even in just the increase in success rate is indicative of a slant toward the seller's market. Months of supply, 4.6 in March 2016, March 2017, 3.6, 2.9 in March 2018. What this means is the number is 4.6, 3.6. These numbers indicate that, let's say we have enough homes. Let's say if today we stopped having new homes on the market, new active listings, people stop selling their homes tomorrow, it would take 4.6 months with normal market activity back in March 2016 for us to exhaust all and sell all of the homes that are currently on the market. And so you see, like a 1 month supply jump or decrease from March 2016, 2017, and then about 0.7 month supply from 2017, 2018. So what we're seeing here is basically what it'll confirm on the graphs, that where our inventory, people are just not selling their homes, and there's some reasons why, and I'll introduce those later. But really, just low inventory is usually a sign of a seller's market. So zooming out here, these are active listings as of March 15, 2018, and you'll see they follow similar trends. Look at 2016 here. This graph, from January to February, it does increase significantly, and you see a consistent increase on basically in the past 3 years. And then from February to March, you see in 2015 it went down, 2016 up, 2017 up, but look at 2018, a little flat line but trending a little bit downward. So they're similar to 2015, and who knows what will happen here. But as history tells us, it does, the past, with the exception of 2015, the past 2 years have been an increase March to April, but have similarly decreased April to May. But this is quite interesting, mimicking a 2015. 2016, 17 were very strong years. So 2015 is seeing a little bit of a flat line. Pending listings, you see, it's pretty much across the board similar in regards to pending. Pending is when they go under contract. And yeah, this is fairly predictable, at least in the past. Since 2014, you can see a similar trend. Of course, give or take a couple hundred or even 1,000, up to almost 1,000 some years difference. But the trend lines are similar, and that's the key here, is that they're fairly simple. I'm showing you these so you can see the year-over-year history, kind of give you an idea of what's happening in the market, and when the buyers are actually putting offers on homes. And you're seeing a lot of them here. Really here. Here's a good section of time. Sales per month, and we're seeing 2018 is actually higher than the past 3 years, starting out in the beginning of the year, which is kind of neat. Homes are selling. be a lot of activity happening this year. Days of inventory, again, like it's the months, those months, the 4.6, 3.6, those figures. Now you're seeing them, year over year here, what they're looking like month to month. And you can compare the days of inventory. 2018 just started out significantly lower than even 2017. And 2017 was lower than 2016. And 2016 was lower than 2015. 2014 is right here. So, but the key is though is that this, since 2016 has gone down. These are strong years, right? 2017, 2016, 17, 2015 even was a strong year. In fact, things started to turn around in 2013. And it slowly started to improve 2014, 15, 16, and onward. But you're seeing low inventory. See that again, confirmed here by this, just this snapshot of year over year. So I show you all these graphs just to give you an idea of the snapshot. So the data that I showed you in the beginning, you can kind of see them at face value here at a larger scale over a greater period of time. Some notable points, and I intended this to be a shorter video. It's probably going to be like 10 minutes, but I didn't want to go into too detailed of an hour, 2 hour breakdown, which some of the meetings I go to are like that. But I just want to give you a little bit of an update. Sellers, some notable points for sellers. Sales prices continue to increase at excellent rates, about 6% over January 2017 and January 2018 year over year. 6%, 6.5%. The key though is that home prices are appreciating, and that's a good sign for sellers. The latest actually update from the Cromford Report, which by the way is where this information is from, is the Avondale now is the hottest sellers market there is in the Maricopa County cities. So Avondale and the Southeast Valley, so we're talking about Mesa, Chandler, Gilbert, at the hottest sellers market at this time. I have a little experience with trying to help clients buy a house in the Southeast region. It is very, very hot sellers market, and there's a lot of investor activity and there's a lot of buyer activity. So it just seems to be a desirable place to live. Avondale is sort of interesting. I have a hunch about why that is. Avondale homes tend to have more of a They tend to be more entry-level homes. You have, in the 150s even, the 200s, the lower 200s, which if you're a first-time home buyer is a very desirable area, or even just relocating from, upgrading from a home that you bought 5-6 years ago, that's probably the next step, because, they're still affordable. You can get more house there than what you would in the, Phoenix area or Scottsdale or, even West Phoenix. The more inland, if you will, the more into the city that you get into, closer to Phoenix or in Phoenix, the hotter it is. The key is location, right? So, but those two are really just the hottest areas of Phoenix. Heavy investor activity, 300,000 and below, absolutely. In fact, one listing I have currently was an investor offer. And it was a very strong offer, which was good news. But we're seeing a lot of activity. In fact, one notable item to talk about is especially over the past 2 years, the increase in Airbnb rentals, short-term rentals, which are an actual interesting statistic because we're not able to track them right now because it's not public record. So a lot of these homes that are being purchased are being used as short-term rentals, which does affect the market. One, because we can't track it. And because it's not public record, and two, that it's actually taking these properties that are being used as short-term rentals out of the real estate pool, if you will, out of the inventory that we have, and putting them into tourism. So without knowing which ones, with one, the increase of short-term rentals and the removal of properties from the market for actual real estate, people to actually live in them, it's causing some perhaps even contributing to this low inventory that we have, because these typically they don't just hold them for a year. These are held long term and are used for cash flow. And from personal experience, if not or first hand, maybe second hand experience, however you want to say, that the Airbnbs are actually, or short-term rentals, cash flow significantly more than a buy and hold. It requires a lot more activity in terms of maintenance than a buy and hold, traditional rental, long-term rental. But the cash flows are incredible, especially in peak season. 300 to 500,000 homes that were, homes that were in the 200,000s are entering this segment. So because of the appreciation in prices, homes that were in the 200,000s 5-6 years ago are now starting to come into the 300,000s. So we're seeing an increase in listings in that range, 300 to 500s, and a lot more activity there too, which is a good sign, I guess, for our current market. When the prices are increasing due to a low inventory and the market's responding by being able to purchase homes at that level, that's a good sign, because buyers haven't given up yet. And it also is indicative of the ability to purchase, because lending practices are a lot more stiff than they were in 2008, 2009, or actually 2005-06, when the bubble happened. So when people are qualifying for these kind of loans, it does indicate, which is confirmed by how strong our economy is doing right now, that we've got buyers that can afford the 300 to 500,000s and still purchase and have real estate activity in those price ranges. Buyers, so a couple things for buyers, which are you could kind of think, because of the 17 major cities in Maricopa County, all of them are sellers markets, except, all of them are. The one that's closest to not being a seller's market is Cave Creek. Interest rates are increasing, and that'll have an interesting effect on demand. Typically, there's actually been some debate about this in the circles that I'm part of. Some people think that, some people even quote statistics, which I don't know necessarily which ones, but the one that I tend to lean toward is, in the short term, buyers will it kind of lights a fire under them, so they'll want to lock in a good interest rate. But over time, as they increase too high, they'll stop buying because it becomes unaffordable, and that tends to soften the demand, which will basically either slow or reverse the process of our low inventory eventually. Because if buyers aren't buying, homes sit on the market longer, and our inventory will increase. That's one way to do it. So we'll see what happens, and something to watch for, and to see how many sales are actually happening, if they're decreasing, or if we're down from last year. Outskirts cities, we're finding sellers are giving concessions for closing costs. So the Queen Creeks of the world, the Goodyears, maybe even Surprise. These cities we're actually seeing sellers actually concede something, and Anthem, if you will, and that's a good thing. I think the demand is still to want to purchase homes in Phoenix, greater Phoenix area. But you can definitely get deals, and perhaps motivated sellers, since they're not getting as much activity as some of these, the Southeast region, the Avondales. Phoenix is still up there. Scottsdale's still hot. So of course, when the market's hot, there's multiple offers on a home. There's less motivation to concede something, because the next guy will be right there to pick up some, pick up a purchase. And if not, it's an actual owner-occupant buyer. It's an investor. Of course, depending on the price range. And last one, underlying economic fundamentals point towards strong buying power. So jobs, people have jobs, increase in minimum wage, consumer confidence in the economy. Our stock market is doing very well, with the exception of the past couple of weeks with massive fluctuations, even record fluctuations, which should be adjusted, and I haven't done the adjustments, but should be adjusted for the fact that we're the highest ever in the Dow. So a 1,000-point drop is percentage-wise should be adjusted for the lower Dow readings that and the big fluctuations that have happened record-wise, which a lot of them happened in 2008, but should be adjusted. So because I think the Dow, from what I remember, was in 2008, 2007, 6, 7 was around, I don't think it even breached 20. It was like 18, 19,000, maybe 20, but it wasn't 25, 26,000 like we've seen in the past year and a half. But the buying power is very important, and the ability of the general population to purchase homes. They have jobs. People are getting wages, and they're making more money, and so those are good signs for buyers. And they're able to. That a lot of them, a lot more people, if you will, are able to purchase homes. So, nine short slides, but there was a lot of information to cover there. So, I did just want to give a quick sample. It's probably not that quick, but I hope you guys are doing well, and I'll probably try and come out with these videos once a month here to give you guys an update. If you want to know about something in particular, if I don't know about it, I'll try and get the answer for you and come out with a video. Hope you guys are doing well, and we will see you until next time.